As India gears up for another budget, here's a look at how the Modi government has managed Asia's third largest economy since it came to power in 2014. While the pandemic has been the recent factor in adversely affecting the economy, the Indian economy's troubles began way back in November 2016 when the Modi-led NDA government banned high-value currency notes in an overnight move. A year after demonetization, India's GDP output set off on a declining trend. Despite such setbacks, experts initially termed the Modi government's record of managing inflation over the last 7 years as better than that of the previous governments. However, the COVID pandemic and the subsequent supply chain disruptions led to inflation, putting the economy in a state of flux. Amidst such ups and downs, here's a look at how the BJP-led government has fared in managing some key economic indicators. Economic output. India's economic growth started declining 2 years prior to the pandemic. In 2019 to 2020, a year before the onset of the pandemic, India's annual gross domestic product plunged to 4%, the lowest in 2 decades. The following year, India registered a record fall in economic output as its GDP contracted by 7.3%. Retail inflation. The country is currently battling with rising living costs. Job losses and decline in income due to pandemic-induced pay cuts have mounted the pressure on the common people. Prices of tea, edible oil, pulses, meat, cooking gas, and services have gone up by 20 to 40% since early 2020. According to an analysis of inflation data compiled by the Ministry of Statistics, retail prices have risen nearly by 10% in the last 2 years, compared to an 8% rise in the previous 5.5 years after Prime Minister Narendra Modi came to power in 2014. Data also showed that cooking gas prices have risen by 43.36% in the 2 years ending December 2021, compared with a 30.68% rise in the previous 5.5 years. Economists have held higher taxes, a widening fiscal deficit, the Reserve Bank of India's easy monetary policy, and supply constraints during the pandemic responsible for the sharp rise in prices. Unemployment. The economic slowdown has pushed India's unemployment rate above the global figure in 5 of the last 6 years. India's unemployment rate averaged 7.2% in 2018 to 2021 against the global average of around 5.7%. India has been suffering its longest period of slowdown since 1991 and is now providing fewer jobs than in the 1970s and the 1980s. A report by Mumbai-based think tank Center for Monitoring Indian Economy stated that the unemployment rate was at 7.9% in December, with nearly 35 million people looking for work. Amidst this, India is also witnessing a fall in labour participation rate as more job seekers are now looking to move overseas for work. India's labour participation has been around 40% for the past 2 years. This shows the economy's failure in absorbing the available workforce. More than 2/3 of India's 1.35 billion population are of working age. Such a job shortage is problematic for a country like India, where annually 12 million people reach employment age. The Labour Ministry's career website had more than 13 million active job seekers as of last month, for just 220,000 vacancies. Critics say India's unemployment scenario is one of the biggest failures of the Modi government, which promised to create millions of jobs before the 2014 elections. Fiscal deficit. India's fiscal deficit shot up to a record 9.3%, and this was purely driven by the pandemic. The deficit is a result of the government's spending on subsidized fertilizer and food for about 800 million poor people during the pandemic. The government now aims to rein this deficit back to 6.8% in the current fiscal year ending March 31. Privatisation. The Modi government's promise to reform state-run firms by divesting minority stakes and privatising select firms has also run aground. While it sold the national carrier Air India to Tata Group, it failed to sell some banks, refineries and insurance firms as per plans. The government had hoped to raise 1.75 trillion rupees from stake sales in state-run firms, but managed to raise less than 100 billion rupees through disinvestment. If the government manages to list insurance firm LIC before the end of the fiscal year, it could bring in as much as $12 billion to its coffers. Meanwhile, experts are of the view that the government is unlikely to set any more ambitious objectives for privatization, as it has been missing its targets for the last 3 years. The Modi government's economic management has been nothing but a bag of mixed performance. A federal report.